What rich people think of as assets is very different from what bankers and accountants think of as assets. Here, we'll talk about the differences and then give a few examples. Where can we see the difference between how bankers and accountants think about assets and how wealthy people think about assets? To find out if you think like a rich person or not, we'll first go over what an asset and a liability are for both groups so you can guess which ones apply to you. What is an asset? Bankers and accountants say that an asset is something that has monetary value and is owned by a person, a company, or a country. So, an asset is anything you own or have made that you can sell for money at its current market value. Assets are often listed on a company's balance sheet, which shows everything of value the company has. A debt can also be an asset, in which case the amount somebody owes you is the value of the asset. If you can't get the money, you can either write it off as a loss or sell it at a discount to another collector, who will then be able to get the money for you. For rich people, things are much easier. An asset is a thing or resource that makes money for you even if you don't have a job. You can make money from the asset without having to do any work. So long as you own it, it will keep doing this every month. Even though bankers and accountants can sell their assets for money, wealthy people won't see them as assets if their value goes down over time. They'll see it as a liability. What is a liability? Bankers and accountants think of a liability as anything a person or business owes to someone else. Most of the time, this is a number. Most of the time, it is a loan, bills, rent, a mortgage, or taxes that have built up. When someone buys something and then owes the seller, the government, or the bank money from the price of the thing they bought. The cost here will also be seen as a liability because you will have to pay for it in the future if you lease a car or hire a craftsman before getting paid. Again, it's much easier for rich people with money. A liability is something that takes money out of your pocket. No matter what it is, it will be a burden as long as it costs you more money than it brings in. Rich people think that most of us spend our lives getting things that we think of as assets, but if we think like rich people, we won't see those things as assets. Then we find out that they are actually liabilities we didn't know about. Here, we'll go through a few situations to see if you can tell the difference between an asset and a liability, and what kind of perspective you have. Is a chair an asset? If you ask different people, can cash be used to buy the chair? If the chair is worth something, the bankers and accountants will list it as an asset. Because if you sell it, you will make money. Then we can ask ourselves, can the chair make us money? Most chairs lose value over time because they are made of natural materials and are used a lot. People who have a lot of money will call them liabilities because they will take money out of our pockets as their value goes down. Is a car an asset? If you ask different people, can the car be sold for money? If the car is worth something, bankers and accountants will count it as an asset. Because you will get paid for your car if you decide to sell it at some time. Could the car make us money? We can ask ourselves that question again. Most cars will lose value over time because car companies keep making newer models that buyers find more appealing. The older a car gets, the more likely it is that it will need maintenance and repairs. Not only does the car need gas, but it also needs insurance, which you will also have to pay for. Because of this, cars often take money out of our bank accounts, and rich people call them liabilities. Are houses assets? Let's see if you can guess this one, because it's not easy. Please leave a comment below if you think a house is an asset. If you ask different people, can the house be sold for money? Most properties have value, so bankers and accountants will always think of them as assets. Because if you decide to sell your home, you will get money for it. If you have a mortgage, you must pay it back. Any money left over is yours to keep. At this point, we're asking ourselves if the house can make us money. This is where it gets hard, because if you decide to live there yourself, you will also have to pay the mortgage and all other costs. Then it will really take money out of your bank account every month, making it a liability in the eyes of the rich. But if you rent your home to someone else, the money you get from that will cover your expenses and mortgage. Then, it's possible that your cash flow will be positive, giving you money each month. People who have a lot of money will now call their home an asset. Stocks an asset or not? Can you get money by selling the stocks? Stocks usually still have some value unless a company goes bankrupt and loses all of its assets. If you decide to sell your stocks, you will get paid for them. Because of this, it is called an asset by accountants and bankers. Can stocks help us get more money? Is a question we need to ask. Most stocks don't cost anything to keep, so they can help you make more money. This could happen if the value of the stock goes up or if it pays dividends before it is sold. Because of this, rich people will call them an asset. Cash, is it an asset? This question is also a little hard, but let's try to ask ourselves the right ones. Can the money be turned into cash? The money already has value because it is money. Because of this, it is called an asset by accountants and bankers. Can cash be used to give us money? Even though cash is already money in our pockets, it can't be considered an asset unless it brings in more money. Money, on the other hand, can't grow on its own. It will have to be put somewhere else or left in a high-yield savings account where it will earn a very low annual rate. If you just keep the money, it will lose value over time due to inflation. Cash, on the other hand, falls into a gray area that is closer to a liability for our purposes. Before money can be an asset, you have to put it to work. Rich people won't have a lot of money because they always invested in something else that makes them more money every month. Is a computer an asset? If you ask different people, can cash be used to buy the computer? Most working computers can be sold for a profit, so bankers and accountants will see them as an asset. Because if you decide to sell it, you will get money for it. Can we use a computer to put money in our pockets? Many of you would say that what you do with your computer determines if it makes you money or if you have to spend more money on it. But if we only talk about the computer, it won't be able to make money for us without our help. It will cost us money over time as its value goes down, and rich people will call it a liability. We hope you can now tell the difference between how rich people think and how bankers and accountants think. The next time you want to buy something, think about whether it will be an asset or a liability, and whether it will help or hurt your efforts to save money. If you want to have a lot of money in the future. We're here to help people with personal finance, so if you are interested in more topics like this, make sure to subscribe to the channel. That way you will be notified when we release a new video which might help you on your journey.